Good afternoon, everyone, and welcome to Stock Market Today. It's Ali, Coram, and Ken Shreve here with a breakdown of the action in today's session, Thursday, October 19th, with stocks taking a hit on comments from Fed Chair Jerome Powell.
Definitely. It was kind of a whipsaw session. We were down sharply, up, and then down, and then up and down, back and forth, but ended up maybe not surprisingly being not such a great close today, Ali. Let's take a look at Tesla. That was obviously in the news today. The results were expected to be bad, and they probably were a little worse than expected. Zscaler in the security software group got a really nice upgrade today, shrugged it off. And finally, in the software sector, Vertex. VERX.
Yeah, a different Vertex.
Different Vertex.
Sounds good. We'll get to those three stocks, but first let's take a look at the major indexes today. The NASDAQ down 1% by the end of the day. The S&P 500 down some 0.9%. The Dow down 0.8%, and the Russell 2000 down 1.5% here today. So the more and more sessions that we're on, Ken, that resistance at the 50-day line looked like it was pretty strong. And now is that 13,000 level going to be a magnet to the downside?
Yeah, I mean, it looks like it could be. This is exactly what a market looks like when it's starting to get under some distribution. You know, look at the volume that we had on the downside today. That was after a higher volume decline yesterday that we discussed. So I think on the NASDAQ now we're talking, gosh, there's about four distribution days since October 12th. So that's what we call clustering, and almost always that causes problems for an uptrend. Now, you mentioned the NASDAQ getting turned away at the 50-day moving average. I think certainly a visit to the 13,000 level, it brings that into play. Now, if we get a violation of that, and you get another shakeout in the market, that could be the impetus needed for a good year-end rally, maybe one last shakeout in the market. But we'll have to wait and see if that happens. What we know right now is we're just seeing the NASDAQ under some distribution here.
Right, exactly. Maybe we'll get another little mini third wave down here and support at the 200-day line. We'll have to see what plays out. But with where the NASDAQ is now, it is now getting close to the low of the follow-through day low, and that follow-through day happening on 10/6 to try to inspire a market rally, but we're not seeing a lot of momentum. So even though follow-through days are a signal to start dipping your toe in the water, it's not a push all your chips to the center of the table and make big bets kind of signal. And when it becomes more of a bullish signal is when you see a follow-up on the follow through. And we really never got that. We really haven't seen overwhelming institutional buying coming into the market, Ken.
No, and when we look at follow-through days throughout market history, because we've always seen them at market bottoms, but some of the strongest ones, you get what we call these, additional follow-through days, just additional signs of strength after that first initial sign of strength. So yeah, the market's really just struggling here right now. The market was volatile today. We had Fed Chairman Jerome Powell sort of acknowledging that the bond market has been doing a lot of the Fed's work for it. Noted that financial conditions have really tightened with the soaring 10-year yield. So at least the initial reaction to Powell's speech was that the Fed really doesn't seem to be in a rush to hike interest rates again. So that's some good news. But you have the 10-year Treasury yield up sharply now for four straight days, and right up near that 5% level. It'll be interesting to see if that 5% level turns out to be that round number where maybe it starts to back off highs.
Yeah, we'll have to see if that plays out. Let's also take a look at the S&P 500 here. Tried to break out of a little trading range earlier this week, but bumped its head up against its 50-day line. Now trading about 1.1% above the 200-day. Got support there previously. We'll have to see if it can do it again or if we'll get a shakeout below that level, Ken.
Yeah, S&P 500 also had higher volume. The volume bar at the bottom hasn't quite updated fully yet, but it looks like we're going to get higher volume on the NYSE. So, distribution or that we've seen in the S&P 500 has been a lot milder than we've seen on the Nasdaq. So, maybe that's not a surprise. You get a lot of high valuation, tech stocks in the Nasdaq. You have oil and gas stocks that dominate the S&P 500 that have been outperforming. So, the distribution has been much more pronounced on the Nasdaq. We probably get the second distribution day for the S&P 500 today. But I have to tell you, even when we saw that initial follow-through day that had some signs of strength, it just it was just a not an easy one to trust with just the interest rate environment and these kind of things. So.
Yeah.
S&P 500 kind of coming close to that test of the 200-day moving average here. So kind of at a critical juncture right here with the Nasdaq.
It really is. Let's take a look at the Dow as well, because it was trying to hold around that 200-day line, but dipping back below it again today for a second session. And the Russell 2000 small caps continuing to struggle. And look at this, Ken, undercutting recent lows from early October, now down at 1,700. So continuing to bleed here.
Yeah, this is pretty rough. Small caps faring the worst. I mean, you have a lot of financial stocks. We've seen some earnings in the financial sector in recent days, and some winners, some losers. But overall, the sentiment among financials is still pretty weak, and that's weighing on the Russell 2000 here. So very, 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 very weak technicals. And when the point I was going to make when we had that. The initial follow-through day for the S&P 500, we only moved our invested percentage up to like 20 to 40%. And that was just sort of a function that we really weren't seeing a whole lot of buy opportunities or actionable charts to look at here. So that was just, one point about that S&P 500 follow-through day. It just wasn't a whole lot out there to buy. So we're just kind of paying attention to the market here and going to let the selling run its course. If we do get, one good shakeout, that's what market uptrends need to really work, and it's what individual stocks need to work too. A little shakeout to get all the sellers out, and then that paves the way for a new round of buying.
Mm-hmm. Yes, we'd love to see that. And you mentioned energy stocks, Ken. So let's take a peek at XLE. It was able to withstand the downdraft for the most part today, closing down just 0.2%. So this continues to be an area we're keeping tabs on. And let's also take a look at another commodity-driven area, and that's uranium. Uranium miners, an ETF here of interest, URNM. This ETF was our stock of the day with a bullish move on this chart.
Yeah, this is an ETF that is really acting well here. I particularly like the look of the weekly chart. You get kind of a longer term perspective here, and this is really what a good solid first test of the 10-week moving average looks like here. So, in a good uptrending market, this normally would be a good opportunity to start a little position here, and maybe some people did today, but we have this kind of negative market tide that's making it difficult to make money on the long side.
It is, but a potential idea here today for those who are interested. Okay, well, Tesla earnings are out and the results were not good. A miss on earnings and a miss on revenue. And those price cuts are continuing to eat into margins. And not only that, CEO Elon Musk tempering the enthusiasm about the Cybertruck, saying basically that it's going to be hard to ramp up production in a significant manner for that new vehicle that they have, even though deliveries are scheduled to begin November 30th.
Yeah, I mean, listen, the results were not expected to be good. Analysts have been ratcheting down their estimates for Q3 for many months now. So this story of falling profit margins, not a big surprise. I think the drop in margins might have been a little more than expected. And you mentioned, I think this Cybertruck is, as Ed Carson, our news editor, noted in IBD Live this morning, it's facing some serious production execution challenges. How are they going to actually, produce these things consistently, profitably? Musk dialed down expectations, saying that it's probably not going to be cash flow positive until 12 or 18 months, down the line. So what we're seeing now on the weekly chart for Tesla is kind of a test of a very long-term support level, and you've got sort of this valuation adjustment going on. You can see even headed into today, with the stock down 12%, it was still a stock selling at 67 times trailing earnings. So it's still a very pricey stock valuation wise. It'll be interesting to see if Tesla kind of holds support at this long-term level here, or if it's in for a further price adjustment.
And this is a somewhat steep trend line from the lows here connecting, Ken, but it does touch quite a few points along this stock's move. But I will say, if you are looking for an equivalent recovery to the decline, definitely not out of the question to see it take a little bit more time off here, Ken, if it is going to ultimately turn higher. But like you said, that first key test of the 40-week line and how this stock acts at that long-term support level might be telling of how long this stock could take a break.
Yeah. I mean, normally when you see, if we go back to the daily chart and we'll see how big volume was today, obviously, there were big sellers in the stock, probably some institutions cutting ties or lowering their positions. But this 200-day line is obviously a key support level to watch. Normally, when you see a heavy volume drop like this, it's going to take the stock a little while to recover from. I'm not sure that analysts are going to be coming to the airwaves tomorrow, pounding the table and putting buy rating on this stock. There wasn't a whole lot of good news in this report, but we'll see if it holds the 200-day line here.
Sounds like a plan. Let's now go to security software, and Zscaler tried to poke its head out of a shorter term trading range early on in the day. It did end up reversing lower, but less than 1% here. And we had an upgrade from Jefferies, and they also looked at their price target on this stock to 225 from 170, which is basically where this closed, Ken. But this stock is turning around. We're now seeing some higher highs, some higher lows, pretty strong relative strength. So seems like one to keep an eye on.
Yeah, I've said it a lot of times in recent weeks, but when you're in a market pullback and you're seeing increasing signs of distribution, a weak market tends to go after everything. You always have, leaders that are crumbling and breaking support levels, but you always have this crop of stocks that are showing strength and holding up. And you have to call these security software stocks, a very strong pocket of strength in the market here. So I wanted to just talk about Zscaler. We have it on leaderboard. You mentioned the Jefferies upgrade today. This was not a small upgrade. I mean, they upgraded it to buy, but also raised the price target to 225 from 170. Now, I don't pay a whole lot of attention to price target hikes, but that's a significant hike by Jefferies. And this chart is still intact, but it's just a good lesson in this market where the tide is clearly flowing negative at this point. Stock can't respond to good news. Maybe not all that surprising that Zscaler couldn't hold that gain. There just seems to be increasing negative sentiment in the tech sector right now.
And a lot of nice blue volume spikes to accompany these really strong fundamentals that the stock boasts, Ken.
Yeah, and this is a very simple way just to analyze supply and demand in a weekly chart here. You can see plenty of signs of accumulation here, and the weekly declines, really not seeing a whole lot of volume. So this is a stock that still looks like it's under accumulation. Last week it popped early and closed near its low, and it tried to pop again this week and is back near its weekly low. So looks like it might be ready to pause here, but I think security software stocks should be front and center. There's a lot of strong performing stocks in the group. This is a name that we have in the leaderboard model portfolio right now.
And now let's take a look at Vertex, not VRTX in the biotech space, but VERX in the financial software group, hanging around in a buy zone after breaking out of a cup with handle base here, Ken. We've got earnings coming up in 2 weeks, and this is another stock with a compelling looking relative strength line.
Yeah, tax software for enterprise clients. So it's not like an Intuit and a QuickBooks type company. They serve enterprise customers. So what I liked about the latest pullback here, first you had a pretty decent breakout over that 2303 pivot, and then the pullback down to the 21-day moving average was in very light volume. Now this stock does not have the average daily dollar volume that we typically like to see. It is a small cap stock, but it does have a pretty sizable market cap, even though it only trades about 350,000 shares a day. Yeah, you can see 3.6 billion. So it's still a small cap company, but I think this stock's strength needs to be. We just need to acknowledge it because the weekly chart is still looks good here. That accumulation distribution rating of A minus. Anytime you're looking at a stock with an accumulation distribution rating of A minus, that's telling you that there's something good going on with said stock. So Vertex still looks like it's under accumulation here, not much volume behind the down days, and still looks actionable here.
Great. Well, thank you for that analysis, Ken. And thanks everyone for tuning in. That is it from us for today, but we will be back with more tomorrow morning on IBD Live. And we hope everyone joins us, investors.com/IBD Live for all the details on that. We'll see you there. And we'll also see you right back here tomorrow at the close.